secure loans and the likes. So that's that for the lender. So you also have the let's say suppliers now. Suppliers need to know. Suppliers, they are also part of the users of financial information provided by accountant. And so suppliers, they need to know if the entity will be able to pay off their debts, as it were. So here, the review will be on the payables of the company or the entity or the business, so to say. So that is that for the suppliers. And then after the suppliers, we have even government and its agencies. Government need to know the level of compliance with extant laws. You know, for instance, Company and Allied Matter Act prescribe that every company must present an annual financial report. So they need to know the level of compliance. And then when it comes to tax authority for the government, you need to know if the business is actually paying what we call income taxes. So that is the needs, as it were. Then you have others like the employees. Employees need to know if they will continue to receive their salaries. It's important for them to know if the entity will be able to continue to pay their salaries. Then continue to pay salaries. That's that for the employees. Then we have other users, which also include the creditors. The creditors, all of these ones, they also need to know the creditworthiness of an entity. So you have various users, external users, even members of the public. Public need to know the going concern, that is, if the company will continue to be in existence. Then you also have even investors. Investors need to make decision as to their investment in the entity. Maybe to invest rather in the company. That is okay. So that is that for that. Like I said, so those are the users of a financial statement. There are still more than these, but basically we can just mirror it down to these ones: internal users, shareholders, managers; external user, lenders, suppliers, government and its agencies, employees, creditors, members of public, investors, and their needs are well stated there. So quickly, let's go to the other one, which is the roles of the accountant. The roles of the accountant. And the importance is if we want to mirror it, and we will say why do we need an accountant in a business. Number one, for financial reporting. For financial reporting, an accountant in the business to be able to enhances your report, as it were. You know, the quality of your report will also determine the quality of how well you are able to render account of stewardship. So you need an accountant for financial reporting. That's number one. Number two, you need an accountant for compliance purposes. For compliance purposes, an accountant will help you to comply to extant laws and regulations, as well as standards that guide the preparation and the presentation of a financial statement. Also, why do you need an accountant or roles of an accountant? They help to trigger what we call internal control. They put internal control in place. You know, they said where there is no control, abuse are inevitable within the business. There will be a lot of leakages. So you need an accountant in order to put controls in place. That's that for that. Equally, why do you need an accountant? What is the role of an accountant? They do what we call analysis of financial information. They do analysis of financial information, information, as it were. And what do? They analyze every financial information and put them in perspective of quality decision making. You know, if there are no analyses, you may not be able to make adequate and informed decision. That's why you need an accountant, or that's the roles of an accountant. And the next one will be preparation of your taxes. Preparation of taxes. You need an accountant to help you prepare your taxes. If you are not tax compliant, government may come and shut down your businesses, and that's why you need an accountant to help you prepare taxes, as it were, and help you to even file them and get the necessary certification. So that is that for